The interest rates on federal student loans doubled today. Congress has been going back and forth on new legislation that would have prevented the massive hike, but they left without voting on it. Jennifer Lukey has the real deal tonight on what it means for current and incoming students.
Jen White started at a private college a few years ago.
I was actually at Hobart William Smith College as a private school, and the amount of loans I would have had to take out to complete my degree there would have been just insane. And I actually did choose to transfer to SUNY Albany for the price and the value of the education at SUNY school.
But her loans are becoming just as unmanageable here. So much so, the senior is considering postponing grad school.
I don't know if I'll be able to go because I'd be paying off loans for how long, and is the value of the education worth the loans that I'll be struggling to pay when I finally have a job?
It's a question every student is asking themselves.
At the moment, the jobs, they're not going to cover it. The salaries are like $20,000 to $30,000 starting off, and then I still have to factor in all the other things in my life, plus housing, food, everything.
Half of all of the students at SUNY schools receive federal loans, and the interest rate on those loans has now jumped from 3.4% to 6.8%.
It's really new freshmen like these incoming students at UAlbany that will be most impacted by this change.
Because if you qualify, you take out a new loan every year you're in school. Congressman Paul Tonko sponsored a bill that would have frozen rates at 3.4% for the next 2 years, but partisan bickering blocked it from being voted on.
This is a problem that I think is self-engineered. We have had plenty of time to work on this situation.
A year, in fact, and still no deal.
We were at this point last year, same time last year, and you had the one-year extension to try and work out a better deal. That didn't happen. What's different this time around that you think the 2 years will be different than the last year that the deal wasn't reached?
Well, I think there's slow but steady economic progress. The private sector situation keeps improving. We've had several more months of steady climb in that private sector job growth. There are now many suggesting that the deficit situation is being more favorably resolved than it was a year ago.
Tonko says if an agreement can be reached soon, it would work retroactively. But for now, if you're taking out any new federal loans for college, expect to pay a lot more for them. In Albany, Jennifer Lukey, CBS 6 News.
This increase in rates impacts only current students who are taking out new loans. If you have federal loans that you're already paying back, the rate will not change. Congress returns to Washington July 8th. We'll keep on top of things and keep you posted if they make any changes.